What is Chime and how does it work? If you are at a stage in your life where you are protecting your hard-earned nest egg, or you are looking at your retirement income and wondering how to stretch every single dollar, that is the exact question you need to be asking. Look at me. Look at me right now. Why are you asking about Chime? You are asking because you are sick and tired of your traditional brick-and-mortar bank nickeling and diming you with monthly maintenance fees, minimum balance fees, and paper statement fees. You are living on a fixed income, or you are about to, and the thought of giving $20 or $30 a month to a multi-billion-dollar bank just to hold on to your money makes your blood boil. It should. I understand that fear. When you have spent 40 years working for your money, the last thing you want to do is gamble it on a smartphone app. So let's strip away all the marketing fluff and get down to the absolute truth about what Chime is, how it works, and whether it deserves a place in your retirement strategy. First and foremost, you need to understand one critical piece of definitions. Chime is not a bank. Let me repeat that. Chime is not a bank. It is a financial technology company. Now, do not let that technical jargon scare you. What it means is that Chime builds the easy-to-use app and the website, but they do not actually hold your money in their own vaults. Instead, they partner with real, traditional, federally insured institutions, specifically the Bancorp Bank or Stride Bank. Why does this matter to you? Because it means the second your retirement check, your pension, or your Social Security is deposited into Chime, your money is fully FDIC insured up to $250,000 through those partner banks. If Chime as a company goes completely out of business tomorrow, your money does not vanish. It is backed by the full faith and credit of the United States government, just like the money sitting in the massive bank down the street with the marble pillars. Your core principle is safe. So, how does it actually work on a day-to-day basis? When you open an account with Chime, you get a checking account, a savings account, and a Visa debit card. You manage everything through an app on your phone or on your computer. Because they don't have to pay for thousands of physical buildings, electricity, and tellers, they pass those savings on to you. This brings us to the biggest benefit for retirees, the fees. Or rather, the total lack of them. Chime has no monthly service fees. None. They have no minimum balance requirements. You could have $1 in that account or $10,000, and they will not charge you a penalty. If you are trying to manage a tight retirement budget, knowing that your account balance won't be eroded by standard maintenance fees is a massive relief. Furthermore, they have a feature called Spot Me. Traditional banks make billions of dollars every year on predatory overdraft fees. Every time you use your Chime debit card to buy groceries or gas, they round the transaction up to the nearest dollar and automatically transfer those spare pennies into your savings account. If you spend $41.50 at the grocery store, Chime charges you $42 and puts that 50 cents directly into your savings. You don't even feel it happening, but over the course of a year, those pennies turn into real dollars. And, depending on your direct deposit amounts, Chime offers different membership tiers, like Chime Plus or Chime Prime, which can unlock competitive interest rates on that savings account, up to 3.75% APY. Alongside cashback rewards on everyday spending categories like groceries or gas. But I would not be Susie Orman if I only told you the good news. We must address the realities and the drawbacks, because Chime is absolutely not a perfect fit for every single retiree. You must look at how you handle your money before making the switch. The biggest hurdle for many people in their golden years is the lack of physical branches. If you are someone who likes walking into a bank, sitting across the desk from a manager named Susan, shaking her hand, and having her print out a physical copy of your ledger, Chime will frustrate you. There is no physical branch to visit. If you have a problem, you have to use their app, call their 24/7 phone support line, or use their online chat. While they have priority customer service for accounts with steady direct deposits, it is still a digital-first experience. You have to ask yourself, are you comfortable resolving a financial discrepancy through a phone call or a smartphone screen? If the answer is no, stop right here. Your peace of mind is worth more than saving a few dollars on fees. The second issue is cash. If you are a retiree who frequently deals in physical cash, maybe you sell items at craft fairs, receive cash gifts from family, or prefer to keep cash on hand, depositing that money into Chime is a hassle. You cannot just slide cash into an online app. To deposit cash, you have to take your physical money and your Chime card to a retail partner like Walgreens, Walmart, or CVS. Now, Chime allows you to make cash deposits at Walgreens locations nationwide for free, which is convenient. But if you use other retailers, they will charge you a fee at the register just to put your cash into your account. If you are paying a $3 or $4 fee every time you deposit cash, you have completely defeated the purpose of using a fee-free online account. Third, you must understand that Chime is built for basic, everyday money management. It is designed for cashing your checks, paying your bills, and saving a little extra on the side. It does not offer complex financial products. If you need a certificate of deposit, what we call a CD, to lock in a fixed interest rate for your retirement income, Chime does not offer them. If you need a money market account, a joint account with your spouse, or investment services, Chime does not provide them. If you need to wire money internationally to a family member overseas, you cannot do it directly through Chime. You would have to use a third-party service. Be the master of your own cash flow. Understand exactly what a financial institution can and cannot do for you. Protect your hard-earned savings from predatory fees, and never accept a financial setup that keeps you up at night. You have worked too hard to get to retirement to let your banking choices cause you a single ounce of unnecessary stress.